if you're looking for a quick swing trade, if you're looking to make a quick buck in this market where any gains, it's barely keeping the momentum. Any gains, like today, for example, the market gained what, 2%, Dow Jones, Nasdaq and everything. But I'm looking after hours now, and everything is already down big time. Why? Because Snapchat, Pinterest are down 15, 20, and 30% respectively. So if you want to kind of set yourself now for when this whole craziness will be settled down, when everything will be kind of going back to a certain level of direction, well, I may be having something for you, because we're hearing from Blackrock, which manages what we call a momentum ETF. All right, a momentum ETF is an ETF which buys stocks that for a specific period of time will be gainers, and that's how they're positioning themselves. Because when you look at what we are right now, we are pretty much heading into summertime, and summertime is historically during the year that period of time where stocks within the oil and gas sector, within the energy sector, are reaping. Why? Because people are traveling. People travel, and if you looked at bookings so far from, airlines company, leisure companies, if you look at how the sector look, I mean, we're expecting a lot of people hitting the road, hitting the planes, just because for the last 2-3 years, people have not really had a chance to travel as they used to before the pandemic. All right. So even with high prices, people are still going to spend a lot of money because they just want to go out. They're tired of buying stuff. Now it's about, building those memories and having those experiences back again. And that's why it kind of makes sense, not kind of, it makes sense for BlackRock Momentum stock to be reshifting and rebalancing almost $10 billion into the energy sector. Now, if you want to position yourself in order to win over this and make a quick buck, I've always kind of suggested to buy stocks here that are the small caps, because the small caps give you the most amount of return, but you also keep in mind that they are the ones that are also more risky. They can go be up, 5% like today, and tomorrow they can be down also 5%. But let me just kind of spread this into three for you. All right. So if you want to go with the less volatile, meaning, you won't make as much money, but at the same time, you won't also lose as much money when the market turns red or when the tide turns red. So for those, you can look at this ETF, XLE stock. This is the energy ETF within the S&P 500. And today it's gained 2.6%. If you look at where it was kind of, 6 months ago, it's been consistently climbing, and I believe it's going to continue to climb, maybe touching the 90s or maybe the 95. Why? Because of the high season for the consumption of oil and gas coming during summertime. So the XLE, it's one of the safest play out there. Now, if you want to also go with the big dogs, you can get shares of stocks like Chevron, and Exxon, those are those stocks that will give you maybe a 2-3% on a good day, but also when the market is down, they will not be down 5% if there is no shocking wave in the market. And these also pay a good dividend, these two. All right. Now, if you want to have both a dividend and you also want to have that capital appreciation, so your money growing maybe 5%, 6%, Devon Energy is another strong play. Devon Energy right now trading at 70, but the target here is really around 80. It's so from 75 to 80, 85, you're still talking about a $10 to $15 a share, which is not bad. Plus two type of dividends this company is paying. Another one will be CVE stock, Cenovus Energy. So right now the highest is around $22, which I believe it reaches that today. But in terms of dividend, you can also expect to have something decent coming from this company. But since this already reached new all-time high, I will be a little bit more careful given the huge run-up it already provided. So now the third bucket will be those companies that are still really sitting in the trash. And those are the companies that have a lot to offer in terms of upside. So if you look at Sentinel Development, for example, before the pandemic was trading around what, $10-11 a piece, given the current prices of oil as per barrel. All right, so we're still looking at what, if we go to where it was around the 11, we're still looking at a 35% upside. When the market kind of sells down, this will be a good candidate. Another one will be CPE. CPE price target here, I think we are about $134 a piece, so more than the double. And then you have others, such as Grand Sierra Energy. These are the kind of the cheapest and still trading below $2. But prior to the pandemic, it was trading way above the three, given oil being as expensive as it is right now. So just a couple of ideas there. I'm sure there are maybe more of those, but it just gives you exposure to this rebalancing coming from BlackRock with a $10 billion worth of money flowing back into the energy sector as we're heading towards summer season. So let me know in the comment section, if you are already involved in some of these plays. But all of those, especially maybe Synovus, I'm there and I'm investing. I've been investing in those, but also using these as day trade or swing trade plays.